All right, let's get some long-term perspective now from Gamco's Zahid Siddique, Mario Gabelli's right-hand man. Zahid is Associate Portfolio Manager for the Gabelli Equity Trust. The $1.4 billion fund is up over 20% over the last year, beating the S&P and the Dow, which are up 13%. Zahid, welcome to the show. Thanks so much for joining us.
It's good to be here.
We seem to be kind of at a point where you have to decide, is this market going to go up or down? Does the rally continue, or are we in a bull market, in your opinion?
I think we'll continue to have volatility. We'll continue to get news, whether it's from the Middle East, from Europe. Spain got downgraded today, or natural events such as what transpired in Japan today. But regardless of the gyrations, we think the longer-term fundamentals are pretty intact, and there are industries which will continue to do well over the next 5, 10, 15 years. And we really like to look at longer-term, to have a longer-term perspective, and we're very excited about industries, for example, such as aerospace, which we think will continue to do well over the next several years.
And we're going to talk about some of your picks because we know you like a name in that space. Before we do that, though, I also want to bring in a trader who's out there in Chicago, Dan Haugh. He's president of PTI Securities. He's at the CME Group out there in the Midwest. So, Dan, kind of interesting trade this week, interesting trade today. Volume again light here, though. Is it a good sign, though, that we did see the markets kind of hold up here today, or it's to be expected, considering things weren't as bad as in the Mideast as some expected, and Japan largely seems to be somewhat contained in terms of a global economic impact?
Well, yeah, I mean, we were actually worried about something bad happening in Saudi Arabia, so that was a good that nothing really bad happened today. Right. But it's amazing how quickly we're dismissing Japan. I mean, Japan is a huge deal, and this we have no idea how bad this really is. For us to actually be up on the day as much as we are, considering that we really don't have any idea what the economic impact is kind of amazing.
Where do you think, Dan, we're going to see the biggest fallout? I mean, we're talking about insurance companies a little bit today. Is that one of the places that could get hit hard?
Well, initially this morning, you saw natural resources down because everyone thought it was deflationary, because obviously they're big importers of oil. They're the biggest importer of corn. The metals, gold and silver were actually down pretty big, but they came back during the course of the day. I mean, everything came back with the exception of the grains. The grains stayed down there. So insurers obviously a problem, but boy, you would think that there'll be just more general economic impact than we're leading to believe today.
Hey, Dan, one last question here before we go. I mean, where do you think we are in this market? Adam was talking about some technical levels on the S&P 500 earlier. In terms of what you're seeing, do you think we're going to see more downside here, or maybe we've had it for a little while?
Well, the company's earnings are still pretty good. I mean, we did close above 1,300 today. That's kind of a plus. We're flirting with the 50-day moving averages and all the major indexes, which is kind of a negative that could potentially break down. But realistically, what we're using this as an opportunity for our clients is we're raising our put protection, because the fundamentals indicate we could continue to go up, but boy, it's getting more and more nervous every day. We only go up on very, very small volume, and it's nervous to watch. It's very, very nervous to watch.
All right, it's definitely been a pattern that's been playing out. Hey, Dan, thank you so much. We appreciate it. You have a good weekend. All right, I want to go back to our guest, Zahid Siddique, who's here from Gamco. And Zahid, you talked about aerospace companies in particular. Why aerospace that you like?
Sure. We think over the next 20 years, we'll have 30,000 new airplanes, driven by emerging markets growth, driven by retirements of existing planes and energy efficiency. So who is going to benefit from that growth? It's companies like Boeing, and it's also the suppliers to Boeing's like Curtiss-Wright, like Parker-Hannifin, Goodrich. We like Boeing in particular because we think they have the 787, which we think will come on board probably in Q3, which is going to provide a lift to Boeing. Their other programs are ramping up, 737, 747, 777. All of that will be good. They just got the tanker contract. We think that's good. They should earn about $4 this year. We think in the next 3-4 years, that number should grow to $9.
There's not a lot of competition there, is there?
Right. Airbus is the only other player. There are some Chinese competitors that may enter down in 2014, 2015, but in the near term, it's all Boeing, really, and Airbus. And I think 787 will provide a pretty good lift to Boeing. Their backlog is 7 years. So in a few years, they'll earn $10. So the stock is trading at 70, so you're paying 10 times.
Not too shabby.
Not too bad.
Hey, Dom, you've been watching Boeing as well. Are you seeing the same kind of bullish signs that we hear about from Siddique?
Yeah, we're seeing some
Zahid?
bullish signs, but, again, these are mixed pictures at best here. While Boeing is doing well in terms of getting some orders, they've had some notable ones. Aeroflot signing an order. ILFC, which is the airplane leasing division at AIG, has a decent-sized order there. But if you look at what else, that $35 billion take order is just the tip of the iceberg for a lot of the defense side of things. But also, you had United Continental, the world's largest carrier, coming out that they were looking to possibly ground their 737, 767 planes because of fuel efficiency issues. So, maybe the question is, guys, is there more of a diverse income stream for people like Boeing outside of just planes, perhaps on the defense side of things?
What do you think, Zahid?
Their defense business is currently roughly one half of their total business. We think over the next 4 or 5 years, that should still continue to be at least 30-40% of the total revenue. So that's a diversification for Boeing. But what's really going to be positive for them is the commercial sector. We think 787, 737, all that ramp up, we think is going to be very, very good for them.
Another name that you like in the transportation sector, if you will, is Navistar. Not too shabby this year. It's up about 11%. What particularly about this company that kind of stands out for you? And I know you guys are long-term players, but
right.
What over the long term?
Navistar makes medium and heavy-duty trucks. That's the class 5, 6, 7, 8 trucks. And as the U.S. economy is continuing to recover, more freight is being carried across the country. Trucks are being utilized more. They are aging. They need to be replaced. They need to be changed. So we think Navistar will benefit. Navistar is a leader in that industry. Last year, there were 110,000 Class 8 trucks shipped. This year, we think there will be 175,000. Next year, 235,000. So significant ramp up in the number of truck shipments. Navistar earned $3 last year. We think they'll earn between 5 and 6 this year, and probably $10 in earnings in a few years out.
Adam, you are obviously a big truck fan yourself.
Love trucks.
You've been watching Goodyear Tire on that Morgan upgrade.
Yeah, well, and here's the deal over at Morgan Stanley. They upgrade Goodyear Tire because Goodyear Tire has pricing power. The stock was up huge today. Take a look. Almost 7%. There it is, 6.62%. So as rubber prices have increased over the past several years, about 200% over the past just, 2 years, they're now at Goodyear Tire able to pass those higher prices on to the consumer. So I guess the question is, if you look at a Navistar, how much, we're talking here about volume growth in Navistar selling more trucks, but is there also a component to higher Navistar earnings whereby they're not able to just sell more trucks, but even able to raise prices on trucks as, say, Goodyear Tire might be able to raise prices on their tires?
They should be able to raise prices given that they are leaders. They have a 35% share in the medium-duty trucks. They have a 20% share in the heavy-duty trucks. They think their share will rise to 25%. They also have newer technologies. They've been coming up with new technologies with regards to their engines. So over the next 3, 4, 5 years, they should have a pricing power over the competition.
Zahid, we have one last name, and it's not necessarily a household name like Boeing and Navistar. Thomas & Betts. Talk to us about this one. I mean, it's up about 17% this year. This has had a nice run already.
Right. That has been a core holding for us. Thomas & Betts makes electrical products. Right. Electrical products is about a $110 billion global industry. We think it's going to benefit from infrastructure growth globally. For example, China, over the next 5 years, will spend about $300 billion on smart grid upgrade. In the U.S., the national electric grid is aging. That needs to be replaced, needs to be changed. So transmission distribution spending in the U.S. will increase. So TNB makes those products, electrical products. They will benefit. It's a $3 billion company. We think they'll also benefit from consolidation in the industry.
Got it. It's an interesting play. Hey, listen, good to talk some picks with you. Thank you so much.
It's great to be here. Thank you.
Zahid Siddique over at Gamco.